Hello, a happy new year to everybody, to those I haven't spoken to already. So this is 50 pips, 5th of January, 2014. So again, this is the first update of the year, so I'm not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take, and the fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog. So guys, how's it going? I hope everybody's had a great time. Let's get ready. So keep in mind that officially, as far as I'm concerned, the year starts tomorrow back in the markets, and heads up, because this is going to be a very interesting week. So it starts off with some data. We got the PMIs coming out on Tuesday. We've got CPIs. We've got another bunch of data, also data ramping up in the US. And not only is this data going to continue, but then we've got the FOMC on Wednesday, and then on Thursday we've got BOE, ECB, and we've got non-farm on Friday. So it's really a jam-packed week. So heads up and cautious, and don't go into the year, I'd say, with any preconceived idea or anything. Just as usual, just focus on the chart. Keep in mind what the charts are telling you, and try and stay as unbiased as possible, right? So that's what we need to strive for. I'm going to do a quick update because not a lot has changed, but I just want to put a couple of things into perspective, and then we'll see how this week shape up. Tomorrow in the weekly webinars, we will start the year, so we'll probably be looking at a lot of fresh charts, trying to update those and look at our outlooks. So I'll be posting those on the blog throughout the week, so you'll be able to keep those or not in the weekly webinars. We'll see those throughout the week and the coming weeks as I start posting them on the open content section of the blog. So gold, what's going on gold? Pretty much nothing. What we said is we needed to respect these lows. We needed to respect these 1200s, and the fact that we couldn't get any traction below that. And also understand that we could just see some wheeling and dealing and some moves over the holidays because of the lower liquidity in the market. But what really counted was how we behaved when the volume started to come back into the market, right? And what happened is after the new year, so already last week, we got the move we're essentially looking for, is a move right back up into these 1250s, okay? So going into the week, what I would say is keep in mind how we behave here, not only as the more volumes start to come into the market, but as all the data points, the FOMC, the ECB, the BOE, non-farms come into the market. What likely will be the pivotal level for next week is we're going to be looking at these 1250s, okay? So as far as I'm concerned, the low range going into next week is going to be that 1200, which is being the pivotal level to the downside. I'm going to be focused on action around this 1250 early in the week, and to the upside 1300. So we're starting to trade again in a range we're fairly familiar with: 1300, 1250, and 1300, 1250, and 1200. So that's what we'll keep in mind. So keep an eye out on how we behave there at mid-range. It's really important for the bears to keep pressure on below that 1250. So it's going to be interesting to keep an eye on that, see how that plays out. ES, what's going on with the ES? So we talked about the fact over the holidays that this was grind higher, that we didn't see a lot all the way up into those 40s if we started to get some traction above the 1812s, and that's pretty much what we got. We kind of topped out in this 1843, and now we're starting to see a bit of a sell-off. Again, I wouldn't really read too much into that. As far as I'm concerned, the outlook remains the same, right? 1800 are key for the rotation higher. As long as any dips back into the 1800 hold, I'm looking for this to continue to take another stab higher, and that would be those 1850s to the upside. If we get some traction below the 1800, then 1780s is the downside level I'm looking at. So that's what's really framing the range going into the week. If we start to see aggressive sell-offs, again, because we do this on Sunday, so just every Sundays, just keep in mind the levels to the downside, which I think are a lot more important, are going to be, I have 1749s, 1718, and 1687. Should this start to get some aggressive traction to the upside, if you want something to help, usually you can have on the daily, you can have the 50, the 100, or the 200 moving average, and you'll probably see they'll start to line up with these levels. So that's what I'd be looking at. To the upside, the levels I have, if we get traction to the upside, are 1874 and 1905. That's what I'm looking at. But again, here, it's all about the 1800, whereas on gold, it's about that 1250. Here, it's all about that 1800, so bullish above, bearish below, at least for the short term. What's going on? CAD, nothing really has changed on CAD. We talked about this, and I did the updates over the holidays too. We said, do not be confused about velocity of move inside the range, right? And what we said was big choppy range, 07, 06s, and we said, unless we get traction outside of this range, this is just holiday chop, wheeling and dealing, low liquidity market. And you see what's happening actually even before the holidays started. You know, it's just been chopping around this area. So what we really need is for the volumes to come back into the market. This will likely happen this week, and heads up for what happens out here. Heads up for daily closes above 1700, okay? That will probably signal continuation to the upside, or heads up for closes below, daily closes below the 0600, and that will probably signal some kind of retracement back into the 05s, maybe into the 04s too. So, but here, it's just chop inside this area. You know, that's what we need to see break and momentum outside. What's going on Aussie? Aussie, we talked about this low range, and we kept on saying that the market will likely try to take a stab outside the purple or the magenta, whatever color it is, box throughout the holidays. But our path of least resistance, what we were expecting those lows to hold, and we're looking for a move back into the 09 level. You can see this basically on the 4 hour, even nicer. You see what's happening. So we're moving here, and we kept on saying, do not be confused about velocity of move inside this box. It could be very choppy, but unless we get a close outside to the upside or outside to the downside, we don't expect to see the next move happening. And what we said, close below, Momo below, we expected 87.60s to come very quickly, but our preferred outlook was for this low range to hold, because there was no reason for this to break and for us to move back into the 09s, and that's exactly what we got now. So going into the week, this is really going to be key. So the shorts have to come in and defend this level and keep the pressure on. So you want to see the shorts coming in here and keeping the pressure on, moving it right back down into the box and keeping the pressure down for another test of those downside levels that have been holding so far. And what the longs are going to be looking for, the longs are going to be looking to get more traction to the upside, most likely back above that 200 on the 4 hour too, and back into the 91 level. Okay, do not forget that if you look at this on this daily, we've been talking about these areas for quite some time. The 91, 90, this was a massive chop zone where the market was really struggling, looking for direction. So once we're back inside here, we would say, as far as strategy, is chop inside here unless we get a close outside, and then we'll be looking for the continuation, similar to the way we discussed on CAD. Okay. Kiwi, what's going on Kiwi? Again, very nice action. We kept on saying this is heavy, but you need to respect those lows. You need to respect that support that keeps on holding. The market had so many chances to smack this down and get pressure back below those 81.10s, and it could never do so, right? Especially when we came back down, even though it's not really a 50 back we would play. We came back into this 50 back. We broke below the 200, and bam, buyers came in right here, and they moved it right above the 200-day moving average right here. And even though it's very choppy, and we said very, very heavy, look at all the wicks here, right? Look at all the wicks supporting. We break back down, back above straight away. We try to go down, back above straight away. And what we said, as long as this action is happening, no matter how choppy it is inside this range, if we don't get a close back below these lows that were set in the 80s, 70s, path of least resistance is for a move right back up to test these highs in these 83s, 83.50s, right? And that's what's happening. So going into the week, just keep an eye for these highs again. That's likely going to be the pivotal level. If the market gets traction above that area, I wouldn't be surprised to see us making a run all the way back up into the 84s, 85s here. If the market sells hard and we we still see pressure on kind of environment, then it's going to be right back looking at those lows as that support that was holding. And that's pretty much the range we've got, and that's what I'd be looking at going into next week. Okay, but again, we also talked about, from fundamental level, I don't like to talk about that too much, but clearly if you're looking at something that's structurally going to catch bid in this year, is probably likely going to be Kiwi before Aussie. Okay, now last but not least, let's look at Euro and cable. What's going on Euro and cable? So cable, right here, we discussed this for a long time. We're talking about that 63.50, 62.50, right? And we said much to do about nothing. Do not get confused about velocity of range inside this area, because this is just chop for a grind higher, right? We came into it, bam, resistance, bam, resistance. We broke above it. We tried to hold a bid. We couldn't. We moved back down, caught a bid, false breakdown here, and bam, all the way back. We hit those 66 we've been looking at on the weekly for ages to play out. So that's done and dusted, okay? So going into the week, nothing really changes. Heads up to see what happens when the volumes come in. Heads up to see when the BOE, where all the other data is going to start to hit the wires. There's no change. As long as we hold above this whole zone, as long as we don't get daily closes below the 62.50s, I'm looking for this to continue to grind higher. If we get a close below the 62.50s, then I'm going to start to look at this to potentially start trading heavy for a move all the way back down into, possibly all the way back down into even those 93.30s, that whole 98.50s, this whole support zone to the downside. Okay, but this is the area to watch. That's going to be the key going into the week. So still bid. Euro, what's going on Euro? So this is a chart everybody should be familiar with. We got all the wheeling and dealing over the holidays. We'll have to see again what happens once the volumes come in, once the data starts to hit, and once the ECB's on the wires again. Big level here, and we talked about this level for a long time, was this 36.50 into 36.00. What we said was for the rotation to continue in extensions aggressively, we had to hold this zone, right? So the first test back here, we held, bam, extension, couldn't hold a bid at new highs. We came right back down. Second time it tried to hold a bid here, got a couple of spikes, but then couldn't hold in the low liquidity market. Now what's going to be key is, as we go into the week and the volumes come in, is this a false break here? Are we going to see buyers coming in aggressively, or is this going to start to rotate back down? Okay, so number one, this is still a key area. Keep in mind what happens early in the week on Monday. If we come right back up, close up Monday above 36.50s, I consider this a false break here. We're right back where we started here. If we close below the 36.00, then what I'll be focused on, I'm going to be focused to see reaction at this 100-day moving average, with the possibilities that we trade back into that super important 34.50 before the ECB, or into the ECB. That was a massive level, because that was the other resistance that we broke above, previous resistance acting as support, false break acting as support, moving back up. So that's the focus. So right here early in the week, 36.50, 36.00, closing above, look for a move right back into those highs. Closing below, look for a move right back into those 34.50s. Keep in mind the market might be a bit choppy as it adjusts to the new volumes, liquidity coming back at the beginning of the week. So guys, wishing you a great week ahead, a great 2014. Again, if you like the content, don't be shy about sharing it, retweeting it, or whatever. There's an end year note I posted on the blog. You might want to listen to that. Some people, if you missed it when you were out on the holidays. And apart from that, I wish you another great year. We'll keep on doing these, and I'll see you on Twitter tomorrow. Have an awesome one. Thanks for listening, guys. Bye-bye.